Morgan Stanley's chief Asia economist, Chetan Ahya. Chetan and his team were ranked as Asia's leading economists in the 2010 and 2011 Institutional Investor Survey. So you're hoping for the repeat in 2012, I'm assuming here as well. So, and a lot will be based on what you actually say to us now, Chetan. Okay. So what are the prospects? Is this rally sustainable right now, and is it really got fundamentals supporting it?
Well, I think Asia has been doing fine. As you know, we didn't have as much of a deep-rooted problem as US and Europe. And if they can see some recovery, that helps us, because as you know, we have been trying to boost our domestic demand through loose fiscal and monetary policy. But it looks like the US and Europe have some bit of recovery now going forward.
How important is it to see a recovery in Europe and indeed the US? I mean, of course, these are huge export markets, but, you know, a lot of these countries that we're talking about are also creating maintaining growth, if you will, endogenous growth theory, I think they call it. And, you know, maybe the region can ride out a Europe which remains mired in a lack of growth atmosphere.
Yeah, I think the exports part bit matters. I mean, what I was trying to say is that we've tried to boost our domestic demand for a while. Now, incrementally, if you try to do that with loose monetary policy or fiscal policy, we will get inflation. So if we get a bit of support from export, that helps us to achieve a normalized growth rate of about 7.5 for the whole region. And that would be still pretty good for us.
Yeah, it would be. And the thing is, though, with the currencies, you know, the euro and the US dollar as well, it's almost like there's a race to the bottom in terms of trying to devalue themselves. But doesn't that help actually shield many of these non-dollar related currencies in this part of the world from inflation?
Sorry, I didn't get your question. How does...
In the sense that most of these commodities are priced in dollars, and as the dollar weakens, and you have, of course, a currency which is not linked to the dollar, you're going to be able to...
Right, I wouldn't necessarily agree with that, because, you know, when you try to weaken your currency in the developed world, they pursue loose monetary policy. And somehow that translates into inflation risk for us. So I think it works both ways. So particularly when they do quantitative easing, we've seen that in the past, commodity prices rally, and that's not good for us because we are a big importer of commodities. Yeah,
and of course LTRO is the latest thing as well at the moment.
Also. And you saw what happened to some of the commodities, particularly oil. It moved up. Yes, there was a bit of a supply problem, but there is a bit of this global monetary easing which is pushing commodity prices.
Yeah, I mean, what is the impact? Is it the biggest threat right now for inflation in this part of the world?
Yes, I do think so. I think you have seen that as a problem already in the way the commodity prices have gone up. Some of the central banks have started to talk about that being a constraint for them to ease monetary policy in the second half.
It is effectively like an interest rate hike, isn't it?
Effectively, no. I think it's more like you're saying that the higher commodity price is effectively interest rate hike. I don't think
especially oil. I'm talking about.
Yeah, I would say it's more like a supply shock for the region, because except for Malaysia and Indonesia, everybody depends on imported oil.
Yeah, and of course this also puts pressure on some of these governments in this part of the world which have oil subsidies, and they subsidize gasoline as well for the pumps are out there.
True, yes, they have tried to manage the pressure so far, but now if oil is up $20, that puts pressure on them to hike domestic fuel prices.
And Chetan, we were talking about the Indian railways just now, and this is really emblematic of the problems that India does face in many regards, and it is infrastructure and the bottlenecks it's creating and really choking growth and potential growth in particular.
Yeah, absolutely. I think in particularly railways, if you see, there has been a lot of actions in telecom, in electricity, in roads, but this is one part of the segment which actually really needs to buckle up. And so when they hiked the tariff rates a few days back, it actually made me feel happy, because I think they're finally then trying to increase the revenue so that they can fund the investment in the railways.
But a lot needs to be done, doesn't it? I mean, it's mind-boggling. It's one of the world's biggest employers to begin with.
Yeah, absolutely. At a point of time, I don't know whether people remember, China's rail network length was lower than India's. And then now finally you just look at the way China has surpassed India's rail network. And so India needs to now get that act together in a context of where the fuel prices are so high. That needs to be the kind of area which needs to go up, so it improves the energy efficiency of the country as well.
Right, okay, and of course when we look at what's going on, inflation there, etc., and it's also far too near to an election, I suppose, which is going to cloud people's judgment when it comes to actually making some of these difficult choices.
Well, I think it's the other way around. While the market thinks that they can't do much because of the latest UP elections verdict, they have a window in the next 9 to 12 months in terms of doing what they want to do right now, which is politically sensitive and difficult. But as you enter into 2013 calendar year, you would probably be held back by the political issues. Yeah. So this is the time. The budget will probably be their first opportunity to act tough and bring down inflation with lower fiscal deficit, at the same time try to drive private investment.
It is, of course, notable. It is Ren Jiabao's last news conference after the National People's Congress. It's a new administration coming in. What are the challenges facing them?
Well, I think the most important challenge China is facing is to shift the growth model towards more consumption-oriented domestic demand versus investment. Because we've seen the domestic demand strength. They have become less dependent on exports post-credit crisis. But we now need to do a different kind of rebalancing, moving away from investment to consumption. And I think that's the key challenge ahead for China.
It is his last press conference, isn't it?
He's talking about Taiwan, hasn't he?
He's handing over the reins, I think, in the fall at some point. So how much, I guess, currency do you put into what he's saying right now?
Well, I think if you see everything what they're highlighting, they are actually talking about this shift in the growth model, which is that they have to slow down the growth rate, but try and ensure that there is a different kind of focus on as far as the social stability is concerned.
Right.
It's no more the same old job creation through low value-added manufacturing.
But it's nothing you don't know already.
No, but I think what we're seeing, I don't know whether you're seeing that there's a systematic action plan which is unfolding. They want to ensure that there is wage growth for the workers. They want to ensure that the migrant workers are better protected and they have the maximum marginal propensity to consume. And third is to focus on social housing. And this is precisely the three things which have been affecting the Chinese households. I mean, they're not bond stamped, they cannot consume. It's the environment which was not supportive, and I think that's going to change now, which is what the policy action is telling us.
How vast is the gap between the wealthier getting wealthier and the poor getting poorer?
Well, I think what has happened is it happens with any fast-growing economy. I mean, if you see the U.S. as well, the inequality is high, and that's happened in China too. But what they did not really try and do is to redistribute. And the new word we hear from all the various speeches from the senior policymakers is to also focus on redistribution and to ensure that inflation doesn't hurt the poor. So I think the focus is the same, to still ensure that there is social stability by looking at the masses, but there are different plans to achieve that now.
Do you think? Oh, sorry, I was going to ask about the Chinese premier. Do you think he'll be welcome in Taiwan if he does go?
Is that to you or to me?
Anyone?
Ask you that question.
We'd have to ask our producer, Sam.
I'm not a geopolitical expert either.
I think that's a good point.
Well, I was just curious about this issue of rising incomes. Incomes are rising in China. That people are getting wealthier. So shouldn't that boost domestic demand in the long run?
What has been happening is you see over the last 30 years that you have seen the wages to GDP and household income to GDP has been going down. So that part of the economy, which is household, which can consume, was actually seeing a decline in share in GDP. But now they're targeting to increase that with wages. So I think that is one of the most powerful tools. And the second one is to ensure that this 250 million urban migrant population who does not have social security in form of healthcare and education gets that. That will free up their disposable income, and then they will also increase the consumption potential.
If you're an investor, is it a question, obviously you're an economist, but if you're an investor, is it a question of wait and see for the next administration to come in before doing anything?
No, I think we can see all the actions. China has the advantage.
It's one party, after all. I mean, it's not like it's a change in government with a different political party and a different agenda. I mean, they've all signed up to this.
Yeah, this is the country
but
which
didn't they say that
to...
when Gorbachev came to power as well?
Yes, it's true. But he was a radical, wasn't he?
Yes.
But no, I think that the new administration already seems to be driving a lot of the changes in the policies. So I think this is a smooth transition. And you don't wait for the new administration to execute. They seem to be already influencing the current policy measures.
Now, you did a really interesting report this morning on Morgan. Yeah, well, there you go. On Morgan Stanley, and they are bullish on China plays, and this is, I guess, predicated on the fact that they're expecting the consumer to continue to consume, and wage growth including to go up, and people will buy more goods from wherever, Western companies as well.
They picked 30 large cap US stocks, including Viacom and Apple, obviously, and then 32 Chinese ADRs based on the Chinese growth, and then negative on US stocks. But as an economist, you can't comment on stocks.
Exactly. I think the big picture trend is very clear.
Let's just rephrase that. Okay, do the economic fundamentals support US stocks?
I think U.S. is a different piece of cake for me. I focus on Asia. I do think that the Chinese consumer will be the new story going forward, which investors will focus on, and I think that's what I would recommend to look at.
In what sense?
In the sense that this is the middle segment, income segment in China is now going to get a lot of policy support in form of income support like wages and other social security measures that will ensure that this part of the GDP line grows faster, and that's what we will make money on.
But this issue of inequality in many countries around the world, not just China, it seems to be getting worse. If you look at the latest figures from the World Bank and some of the development organizations, this income gap is widening. I wonder how much of a threat that is to social stability in China.
See, there are two choices. You could say that they will ignore it, they will let the income widen and take the political risk. And I'm saying that they will not do that. They understand what is needed, and that's why they will try and ensure that the bottom tier gets protected. I think you cannot protect inequality from widening. That will happen, but you have to ensure that the bottom tier moves as well. And I think they are going to do that.
No, you said risk. Is there a risk in China right now?
I don't think so.
You don't think so?
Property, credit bubble?
I think, see, there are challenges. I would put it that way. I think the world took a completely extreme view. China is hard landing, and as you know, Morgan Stanley was constantly saying that we don't see hard landing. And it doesn't mean that it starts to run from here and it doesn't have challenges. But I think that's a country which has actually proved the world wrong, that there is no hard landing. So now that debate is behind us.
Chetan, very quickly, which is the country that you are most worried about in this part of the world?
Well, tactically, I think that I'm still concerned about India, the way they are managing the macro stability indicators like fiscal deficit, current account deficit, inflation. Hopefully things get in order, but that's something which is still concerning me.
There you go. Okay, well, we'll have the railway budget later on
Yeah,
today,
we will do.
And the national budget later on this week.
Yeah, Chetan Ahya there from Morgan Stanley.